Good morning, Southwest Florida. This is Saving the Investor radio show. I am Southwest Florida certified financial planner Alfie Townsend with John Antonucci. We have a special guest here we're going to talk a little bit more about in a bit, Kyle Lee. So we're going to have a fantastic show. I'm going to have John come in and give you some information, and we're going to get rolling.
Yeah, welcome to Saving the Investor, the radio show that's dedicated to guiding you through the world of finance and empowering you to make wise investment decisions. I'm your co-host, John Antonucci, and we're delighted to have you join us today. You want to make sure you have a pen and paper handy because every minute of this show is going to be packed with knowledge you'll want to remember. And as we all know, keeping calm in the midst of market turbulence is crucial. Alfie is known for being the voice of reason and navigating the ups and downs of the market. He's going to be sharing his vast knowledge and providing valuable insights and guidance to help you stay on track regardless of the economic climate. And here's the best part. Alfie wants to hear from you. And Alfie's offering a free toolkit today that can help transform your worries of retirement into confidence. Alfie's toolkit will give you a wide range of materials such as will your money last as long as you do? Are you paying too much in taxes in retirement? The Social Security Decisions Guide. Will a recession rob your retirement? It even includes Alfie's brand new book, Making Waves in Retirement. To get that free toolkit, all you have to do is text the word KIT, K-I-T, to 239-747-1077. If you don't have texting, don't worry. Pick up the phone and call 239-747-1077 and tell the operator that you want Alfie's free toolkit. You can get it home today. Sit back, relax, and let Saving the Investor be your trusted companion on this thrilling financial adventure that we're going to have today. And without further delay, Alfie, let's talk about the market this week. What really drove the markets? And obviously they were volatile as usual. That's part of what we see every week. But what really drove them up or down?
Well, unfortunately, it's Jerome Powell again. You know, wouldn't it be nice if he could just say, listen, let's give this thing time. We had a lot of rate increases this year and last year. Let it have time to work. It's just they're not giving it enough time. And now all of a sudden, anytime they speak, I have a friend of mine who is a client, he'll say, you know what, I think him and his family and Joe shorts the market because every time he sort of speaks, the market goes down because, he talks about, okay, maybe one good thing is looks like no rate increase for June, but now we have July, there's one and there might be another one. When they were thinking it was going to be rate decreases or what the market's doing, now they're pricing in two increases versus decreases. So that's what really drove the market this week.
Well, with the cost of inflation, obviously, and now interest rates being at an all-time high for probably the last decade or two, how does that affect the markets as far as, long-term investing and people that are maybe sitting on the sideline that are saying, you know what, inflation's up, interest rates are up, maybe I should just sit on my money here in a safe investment, but really they're not getting that much return for a safe investment, are they?
Yeah, I mean, it is better than what it was. That's a good thing. You are making some money. But if you're trying to buy a house, we're going to talk to Kyle real soon about, buying cars with this rising interest rate environment. That's not good for that part of the economy. So you have to look at long-term investing is where you're going to fight inflation, own equities, have a diversified portfolio and rebalance, and that's what's going to get you to and through retirement. But when you have a rising interest rate and not really, it's not conducive to the stock market if rates keep rising, and then you have a Jerome Powell saying, hey, we don't know what we're going to do, but it looks like we're going to be raising. It's not, so that's what happened this week in the market. But yes, in the long run, the markets are going to do just fine. If you have a diversified portfolio, you have different sectors like AI right now is just going crazy.
Right.
And that's why your tech companies do very well typically in a recession. Are we heading into a recession? All the managers are saying yes. Now, they were saying it was going to be this year. It looks like it might be at the end of the year or first quarter of next year. But a recession comes, and the good thing about a recession, people aren't buying as much, so it does fight inflation. It will take inflation down. So let's give you a little bit of numbers this week. We have housing. Housing sales did go up And the good thing about that, housing sales went up, more people working on that in that sector. But what it does, that's what made Jerome Powell come out and say, hey, we're not done with inflation because people are still spending even with rates the way they are. So we'll give you some numbers on this. Now, our affordable housing crisis, as home sales have declined, affordable home housing has declined, but prices have outpaced inflation. That's what it's all about. Inflation, you got to get inflation under control. If you don't get inflation under control, it's going to be like, here's South America. Remember Venezuela? They did not get inflation under control, and the dollar was useless. It wasn't worth anything. So it looks like we are getting inflation more under control than what it was 6 months ago, a year ago.
Yeah, eggs are down. I mean, obviously you can see it in the stores. I mean, eggs were under $2, a dozen. So things are ticking down. But obviously you're talking about a recession. All of the, obviously the people that are in the know are saying we're going to have it. But aren't corporate earnings pretty much steady and rising pretty much across the board of solid state companies, right? Yeah,
because what they're doing is they're being more efficient. Every company, and we'll be talking to Kyle pretty soon on the next segment, but every company is trimming what they have to trim to get, to keep profits up. When you're a business owner, you have to make money to keep the doors open. People, what always gets me, and Kyle, you can even chime in on this, but have you ever bought anybody a dinner, a dinner or a lunch, and they say, well, it's a write-off?
Yeah, every week, you buy lunch for the employees, and
it's a write-off.
You do it as a reward. You want to do it. You buy lunch for customers. Hey, you buy our product, and we'll take you out to dinner. But it's a write-off. You just give me a lower price.
Yeah, but that aggravates me. Instead of just saying it's a write-off, I would just say thank you. And know that, you spent, still 70% of your money to buy them lunch. You're going to get a write-off, but you're still paying for it. I think the mentality people have these days is that everything is free. And they think that a write-off is free because they're naive and they don't understand how it works.
That's very true. I have a college degree and a bachelor's degree and taken business classes, and I tell you what, I'm not an accountant, and I can't read the tax code. And even when I do, I don't understand it. So
exactly. So the government does give us opportunities to get out there and write things off. That's why we hire CPAs and tax attorneys. We're not trying to pull a Hunter Biden, avoid paying taxes. What we want to do is reduce taxes, and that's what we do with our clients. We show them how to reduce taxes because taxes are going up in the future. Taxes are definitely going to go up, and they have to go up with the debt that we have. So if you can get tax-free money down the road, pay some taxes now while taxes are low, but tax-free money down the road, that's what we're talking about. So if you want to learn about that, John will let you know how to get a hold of us to really put a tax assessment on your whole plan and see if we can put you in a better
That's tremendous, because Alfie has what's called a retirement simulator process that will walk you through a series of steps that will take you back 10 years, and he'll put his portfolio side by side with yours. And what he does is he does an in-depth dive into your current portfolio to see what's really going on. He's going to expose all the hidden fees that are there. He's going to make sure that you're not taking undue risk for the amount of return that you're getting. He's going to make sure that you're allocated properly and diversified correctly. And he's going to set an income plan and a strategy so that you can set sail to and through retirement. His goal is not only to get you retired, but his goal is to keep you retired, and you don't want to be going back to work after you retire. So give Alfie a call right now, 239-747-1077. That's 239-747-1077. When the operator picks up, tell them I want to take advantage of Alfie's free retirement simulator process. There's no obligation, and when you take advantage of that, you're going to make sure that you have a correct income plan and a strategy that will get you to and through retirement. 239-747-1077, or go to savingtheinvestor.com. Again, his website is savingtheinvestor.com, where you'll find a wealth of information about Alfie, his company, and all the services that he offers here through the Advantage Retirement Group. Stay tuned. We're going to be right back right after this break. Don't go away.
Welcome back to Saving the Investor. Again, this is Alfie Townsend, Southwest Florida's certified financial planner professional, here with Pastor John Antonucci, who is an awesome guy. And then we have Kyle Lee. We're going to really introduce Kyle Lee next segment, because we are going to be introducing a new segment to Saving the Investor, to give back to our community, give back to businesses that are really rocking and rolling in this Southwest Florida. But let's talk a little bit about housing. Housing, again, is, the permits are up. People are building. House prices are still going up here, but a lot of people choose the rent. Okay, they're renting now. So the fact is, the average home price has increased 70% more than the average rent price across the U.S. since 2016. According to Home Bay. Is that like Homeboy or
Home Bay? Never heard of it.
Never heard of it.
But obviously, in Southwest Florida, we're sort of different than the rest of the country, wouldn't you say? I mean, obviously, with the building that's about to boom on Fort Myers Beach, Sanibel, you really don't have a lot of property here, in this region. So, I mean, the prices are pretty much staying high and continually upticking here, aren't they?
You're saying it's not a good time to knock my house down and start over.
I'm telling you, that's the best move you can make, but you should have did it about 5 years ago.
Yeah, it's not we were, Kyle, we were talking about some property that you own and how much it is just to build parking lots and everything.
Yeah, I got a quote in 2021 to build a 4-acre parking lot to move the dealership to, and just the cost of the dirt, the engineering, the development order, and just to pave a parking lot was about $2.8 million.
It's crazy.
And I said, well, I can't afford that. We're going to hold off and wait for those costs to come down a little bit. And we got in, we saw the cost of dirt and the overall cost of construction engineering were coming down, and here comes a hurricane named Ian. So once that hit, just kind of started everything booming again. Now
we're at hurricane season again. We have a little one out there that doesn't look like it's going to do much, and it's I lived in Florida for from 1966. We moved here when I was 5 years old in Miami. So from 1966 to 1988. We didn't. I really wasn't in any hurricanes in all those years, because either I lived in Tampa or I lived in Miami. They were on one coast or the other. So it really wasn't anything that you worried about like you're worrying about them now. And then moved away. Right when we moved away, then Andrew came.
Oh yeah.
Yeah, that was a bad one over in Miami or Homestead. So that was, I missed that one. So I was in Maryland for 20 years. My family's still here, and I moved back here in 2008, and you moved here right during
2003. They said we haven't had a hurricane here since Donna or whatever it was, and they were lined up in the Gulf like a.
You had what? It was Charlie.
It was Charlie, Wilma. They were 4 or 5 of them right in a row.
Yeah. How long you been here, Kyle?
My entire life. So.
Okay. So
we were flying kites during Andrew. We were fortunate on this side to not have the same effects. I remember that, and then. Charlie, we were in college. I was at FGCU, and the beer was cheap at Walmart, and we got a week off of school and played a lot I volleyball.
Yeah, well, it's not as cheap as Bud Light is right now.
No, it's not.
You could take them home right off the shelf. They said.
I found 2 Bud Lights in the back of our refrigerator. I don't know how long they've been there.
You took it to the
I threw them away, but I was going to put them on someone's porch or something. But anyway, let's talk a little bit about the home building surge in May, and this is one of the reasons why the Federal Reserve said, listen, there might be some more future rate increases, because it was an increase of almost 22% from April, because the inventory is low on existing. In the market, especially right here in Southwest Florida, the inventory is still low. So there's a demand, even though with higher interest rates, people are still, willing to pay that to buy a house. Now, remember, interest rates are high right now, but they're not what they used to be. Yeah. I mean, when I was in high school, I just remember graduating 1980. I just remember people were, grandparents and people said, we paid 18% for mortgages. We paid 15% for, so they were paying twice what the mortgage rates are right now but that was during Carter days.
Right.
That was during Carter days, and Reagan got the end. Reagan got the end of it, but he fought inflation hard. And he probably turned it was prosperity after he got in, especially the second term.
Yeah, it was.
Because he cut taxes.
Rates were down to 6-7% for mortgages. Pretty much what they are now.
Let's talk about interest rates, because what they were in 1979, the highest marginal tax rate was 70%. Okay, 70%, and you were in a 35% bracket if you made $20,000. Now that's 1979. So it's not a lot of money.
Well, 35% of 20,000.
Yeah, that's a lot of money then. But I'm just saying. But right now, that's like $100,000. Let's say that 20,000 would be like making 100. Well, you're not in that 35% tax bracket right now until you're at $400,000. Right. So right now is a very, very good time to do some tax planning. If you're not talking about tax planning, if you're not talking about trying to get some of these taxes where they're at zero down the road when they go back up to these high marginal tax brackets, if your advisor's not talking to you about that, you need to give us a call, because we need to look at your overall picture, see if we can put you in a better position to get some taxes, pay maybe some taxes now, but to have some tax-free money down the road. Even if you don't want to pay tax now, there's vehicles that we have that you can put money in and have tax-free income down the road. As a certified financial planner, my job is to look at your whole picture, not just bits and pieces of it, not just the investment, not just the portfolio, but everything.
Yeah, that's what Alfie does. He basically will take control of your financial picture, and by putting together what he calls his toolkit, it's absolutely free. He's going to look at taxes and really see if you're paying too much taxes in retirement, and he has ways to shelter you legally so that you can maximize, obviously, your income each and every year and not overpay in taxes. So if you want to get a hold of this toolkit, all you have to do is text the word KIT, K-I-T, to 239-747-1077. Alfie's Toolkit is going to give you confidence in retirement because it's going to give you a range of materials such as, will your money last as long as you do? Just to pick up that paper and read that is going to be viable information that will help get you to and through retirement. The Social Security Decision Guide, if you haven't taken Social Security, when is the best opportune time to take it to maximize your benefits? He's also going to talk about, will recession rob your retirement? And it even includes a brand new book that he just wrote called Making Waves in Retirement. Alfie is a certified financial planner professional. He has over 40 years of expertise in this industry, and you want to get a hold of his ear and pick up this toolkit. It's absolutely free. All you have to do is text the word KIT, K-I-T, to 239-747-1077, or call that number as well and tell the operator you want Alfie's toolkit. And Alfie, making waves in retirement, obviously, we're experiencing waves in the market, obviously waves up and down. And really, you talk about the waypoint of a boat sometimes, and that's important for people to stay the course because a lot of people, when they hit the waves of retirement, they begin to sort of change. And when they do that, it can cost them dearly, can't it?
I'm glad you brought that up because Kyle here is an avid boater, avid fisherman. And I always talk about, Kyle, if you were just to put your boat, our boats, on autopilot, it will go in the direction you want it to go, but it's not going to fight the current. It's not going to fight the wind. Correct.
Correct. You still have to steer it. You have to navigate it. It's going to go the same heading, but you still got to be prepared.
Get it back on course.
Yeah, right. And you have to be prepared for anything that comes up.
So if you put a waypoint in there, right? If you put a waypoint in there, it will go to that waypoint and it will fight to get to that waypoint, and it will crab sometimes to get to that waypoint because it fights winds and currents, correct?
Correct.
Yeah, so that's the same thing when it comes to retirement. If you have a plan in place, changes will happen that will fight inflation, that will fight volatility, that will fight high interest rates, low interest rates also, and that will give you that income. So that's what John's talking about when we talk about the retirement analyzer to the simulator to put a plan in place. We're looking at all that. We're looking at your taxes. We're looking at your income and looking at taxes. Taxes is what you need to worry about. I am very excited here. I'm just teasing you right now about who Kyle Lee is, but after this break here, we're going to really start a new segment. John's going to introduce it, but we're going to introduce you to Kyle Lee. I've known him a long time, and like he said, he's been here in Southwest Florida his whole life. So that doesn't happen too often, especially someone in your what's your age right now?
38.
38.
Oh my God.
Young man at 38, and this guy is an entrepreneur. I've known him for many years, and he's going to give us some insight on really the automotive dealership and industry and what it's like to be an owner of a couple dealerships here in Southwest Florida and Tampa. So we're going to, you want to listen to some of his stuff, and it might be, hey, you probably want to get a car from him because, he will make you a deal. You hear his commercials all the time. So stay tuned. We're going to spotlight Kyle Lee in the next few minutes. We'll be right back. Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, and we have a great show for you today. You're going to not want to miss this one. And I'm here with Pastor John Antonucci. He's going to give you some of our insights on what we're going to be talking about today. So stay tuned and get ready.
Yeah, you can give Alfie a call at 239-747-1077. That's 239-747-1077. Today we're excited to introduce an extraordinary new segment that shines the spotlight on influential individuals right here in Southwest Florida. So get ready for the debut of the Sunshine Spotlight. In this segment today, we're going to shine a radiant light on the exceptional individuals who are making waves and leaving an indelible mark on our region. From visionary entrepreneurs to community leaders and innovative minds, we'll uncover the stories of those who are shaping the landscape and making Southwest Florida an even more prosperous place to live. This segment is all about showcasing the trailblazers, the risk takers, and the thought leaders who are illuminating the path to financial success and inspiring us all. So welcome to Sunshine Spotlight, this show segment that shines light on remarkable individuals making a difference in various fields right here in Southwest Florida. And today we have the honor of hosting our distinguished guest, who is an authority in the automotive industry, particularly in the realm of car sales. Join us today as we welcome the remarkable Kyle Lee to Sunshine Spotlight, where the road to automotive excellence begins.
Good morning. Kyle, why don't you... like John said, you are a driving force here in Southwest Florida. I've known you for many years, and you have really a deep understanding of really the dynamics of the automotive industry. I believe your father was involved with it, and you can correct me on that if I'm wrong, but I remember that a long time ago. And you are a seasoned professional. And one thing about doing business here in Southwest Florida, you have to navigate a lot of different things because we have snowbirds that come in, we have hurricanes, we have a lot of different things that other climates around the country really don't experience. But what I would want to just say, what has given you the edge here in Southwest Florida where you could open up even another store in Tampa? So talk a little bit about yourself, introduce yourself. This is Kyle Lee, and he's going to take it from here.
Yeah, thank you guys so much. I appreciate you having me on the show. It's great to be here. My name is Kyle Lee. I'm with Lee Auto Group. You might have seen some of the advertising on radio or television, lee-cars.com. Don't forget the dash.
That's it.
I'm that guy. So, Alfie, we've, like you said, we've known each other a long time, and my dad started in the car business in Lee County here in 1968. So, not too long before you first came to Florida. And it's been family owned and operated. I'm local, born and raised. Went to San Carlos Park Elementary, went to Bonita Middle School, Estero High School, and finished up at FGCU. So
that's awesome.
Being able to come back and start a business in the community and provide jobs and service the customers, it's really great. We have a great team, a great staff. We try every day to do the best we can. And at the end of the day, no one likes a car dealer. You know, you could have the nicest. I say my father-in-law is the nicest person in the world. He goes to a car dealership and there's like a guard that goes up, you know. But
Yeah.
we and everyone just wants a good deal, and you know we try to do the best we can.
You try to be fair.
Yeah, you try to be
Yeah.
fair, but at the same time, it's a for-profit corporation. You know?
That's right. And there's nothing wrong with making money, but you can, if you're buying the cars at the right price, okay, you can still make money and give someone a better deal.
Absolutely. And if you look at our location, I was on US 41 when I started back in 2008. We've moved off the beaten path, and we did that to bring down overhead, have a larger inventory, and be able to sell that inventory at a better price to the consumer.
And where is your location?
It's right off of Alico Road, 8181 Mainline Parkway in Fort Myers, right next to the new Amazon building they built on Alico.
Oh, is that more? I tell you what, that was a blessing.
That was. It makes it's a little easier to find now when you say it's next to the Amazon building. So.
And then you have a lot of people working at Amazon that probably sees your shop over there.
That's correct.
So that's good. So what's some of the unique challenges that you have, and what opportunities that arise in Southwest Florida market?
So the challenge is, like you said, you have to navigate hurricanes, you have to navigate snowbirds. I mean, we have a huge season down here, and it's a season in the hospitality industry. It's a season in almost every business that's in Southwest Florida. And snowbirds come down traditionally, and if they're from a little town in the Midwest or the Northeast, the dealer where they're located might not have the selection. Down in Florida, the new car dealerships are we call them Mecca dealerships. They have traditionally have a lot of inventory. So a lot of the snowbirds will drive their cars down and trade them in before they leave to go back home for the summertime. So, when COVID hit, it changed that dynamic a little bit. People were driving their cars longer. There were less trade-ins, less new inventory, the whole chip thing. So they stopped building new cars, and it's just trickle-down effect. So it makes it tough to navigate.
So tell us about, because we were hearing this over and over and over, the Ford trucks, let's say, they were not being out there because of the chip, or they said, we can give you this truck, but you won't have blind sensors. You won't have this. You won't have that. Right. It was a lot of.
Yeah. And it's still like that.
Is it?
Yeah. The GM factory for building the Yukon has just shut down. They've been shut down for 6 months. They can't get the chip for the smart cruise control, and so it's still an issue. There are cars being built without specific options, and they're kind of mass producing some of the lower model cars, and you're starting to see some of that inventory come back and fill the lots.
But isn't that our technology? Why can't we? Is it that? It used to be you need cheap labor, right? Because you're paying people to do this. But if it's automated, doesn't that make sense to build it here and not have to worry about that?
You would think, and with the chip shortage and the whole world economy, they are starting to invest in the infrastructure to do it here in the United States and not have to rely on other countries to build the chips to build our products.
And like medication.
Yeah, we need to get everything back here. You're listening to Saving the Investor radio broadcast with Alfie Townsend. Phone number is 239-747-1077. We're in studio with Kyle Lee from Lee Auto Group. And Kyle, do you find that being in this market of snowbirds, that you have a greater opportunity maybe than other states because the mileage of the cars are lower? Do you get better lower car mileage, which is a greater value to someone down here?
Absolutely. And there's really two dynamics in the whole country that are like that. And it's from Tampa south to Marco Island, and it's on the other coast from West Palm Beach down to about Boca Raton.
Okay.
And we call them condo cars. The people come down here, they traditionally would leave them in their garage or in their condo, and they would drive them for between 3 and 6 months out of the year. They've got extraordinary low mileage. They maintain them with an open checkbook. They're just really, really good quality vehicles to resell.
So that's how you're getting, those are the typical cars. So we want to let the listeners know that what Kyle does is he will get used cars that are, fairly new sometimes, that may be a couple years old. What's the average age of your car? I mean, is it 2 years old, 3 years old, 5 years?
We advertise that we have we have 200 cars under $20,000. It used to be 200 cars under $10,000 pre-COVID. So the average price of a vehicle on our lot is anywhere between 10 and 15,000. So I don't try to compete with the CarMaxes of the world and the bigger dealerships. Now we have 2023s on the lot. I've got two 2023 Mavericks now. One's got 10 miles and one's got 15 miles. So you can still buy like new inventory, but the nuts and bolts of what we do is that $10,000 to $20,000 range.
When you said Maverick, it wasn't the Mercury or the Ford Maverick.
Yeah, the new Ford pickup truck. That's right.
Oh, is it?
Yeah.
Bringing a Maverick back.
That's what they're calling the Maverick, because that was.
I like the Maverick.
Yeah, the Maverick was that was a funny, good car in the 70s. Yeah, he was too young for that. But well, good. Now, how about interest rates? How's that affecting your market right now?
They've really affected our market. So the consumer that would come in and that could afford a $40,000 truck because the interest rates were low. It's the same thing comparatively to the housing market, right?
Yeah.
So the payments were more affordable and they can buy that truck. Now they still want to buy that truck, but instead of having a 5% interest rate, the rate's 11 or 12%. They can't afford the $1,000 payment. They could afford the $600 payment. So we've had to kind of adjust our inventory and keep that in mind when you're buying those type of cars. So
do you have financing at your dealership?
We deal with all the major lenders. We're one of the only non-franchise dealerships that has Wells Fargo and Truist and Capital One and those big banks to be able to provide financing for the consumer.
Nice. So what we're talking about is here in Southwest Florida, we are spotlighting our new really segment we're going to do with business owners. And what's the name of it?
Lee-auto.com, isn't it?
Lee-cars.com.
Cars.
Yeah.
Don't forget the dash.
Don't forget the dash. And but it's a Sunshine Spotlight.
Sunshine Spotlight, yeah.
Sunshine Spotlight. So
and he's the first one, and it's obviously a viable industry in this area, especially for people that want a car. Obviously, whether it be for seasonal or even full term.
Yeah, because I remember during COVID, you just could not get a car. It was like who would think a car. And I'm going to wait and bring this topic up on about leasing and buying your car or selling your car. I'm going to talk about that because a lot of companies are changing the way it used to be, where you could just sell your car outright, but they're wanting to buy it now. But I want to talk a little bit about that. You're listening to Saving the Investor radio show, and we are spotlighting our first business owner here in Southwest Florida on the Sunshine Spotlight, so you want to stay tuned. But you also want to give us a call if you're looking to spotlight your own portfolio. How's that doing? How's your income plan? Do you have a plan to last as long as you do? Our phone number is 239-747-1077. That's 239-747, 1077, and that's to give us a call and let us look at what you're doing. The last 20 seconds, why don't you give your phone number out there?
Yeah, thank you, Alfie. 239-288-7374, and it's lee-cars.com. Don't forget the dash. Come see Lee Auto Group.
Yeah, that's Lee Auto Group, and you've seen his commercials quite often. It's I see him all the time, and he has a plethora of cars there, and I did sell him one of my cars not too long ago. So we'll be right back. There's some great questions regarding the market.
Welcome back to Saving the Investor with Alfie Townsend. You get a hold of Alfie's Toolkit, absolutely free to help transform your worries of retirement into confidence. Alfie's Toolkit will give you a range of materials such as, will your money last as long as you do? Are you paying too much in taxes in retirement? The Social Security Decisions Guide. Will recession rob your retirement? And it even includes Alfie's brand new book, Making Waves in Retirement. All you have to do is text the word KIT, K-I-T, to 239-747-1077. That's KIT to 239-747-1077. And we have in studio with us Kyle Lee from the Lee Auto Group. And talking about a toolkit, Kyle, having a well-equipped car can be incredibly useful, especially during hurricane season. Are there some essential tools that our listeners can put in place that you can recommend for a toolkit for their car in order to prepare for what might come this season?
Absolutely. And we just went through a hurricane, and you can absolutely have value to have certain items that you need and that will help you get through any tragedy. First thing is gas. Make sure you have extra gasoline. Yeah, right. Make sure your tank's full. Make sure you may have a couple extra spare cans because you don't know when those stations are going to open back up. A spare battery or a jump box, a jump pack. You can pick those up anywhere from $50 to $100 online or at any local store. That's always good. God forbid something happens to your battery and you can't get it started. You can still start that car and get out of town. And then, of course, the essential, make sure you have a spare tire, make sure it's inflated, it's good to go, your jack, all your toolkit that you'll need to change a potential tire on the side of the road if you're going to evacuate or you need to get somewhere after a storm or something comes through. But yeah, it's really good to have all those tools and a flashlight, just a small toolkit to be prepared.
Yeah, Alfie, many people during Hurricane Ian obviously had their cars in the garage and they got flooded and came out and it was totally totaled. How can you really relate to the people that are listening today how important it is to have a toolkit? Because obviously the storm may not be natural in the financial realm, but it is a storm that could really derail their retirement and set people back. And I just saw on Cavuto yesterday that only 40% of the people that are investing are confident that they're going to be able to retire on time. How can you get them to and through retirement, even in the midst of these setbacks that we have in the financial area?
Well, Kyle was just talking about having a plan in place, in event of a storm. You have to, when it comes to a financial plan, you have to have that in place. You have to have an income plan. You have to know where that income's coming from. If it's coming from portfolio for structured notes, if it's a annuity, just something. You have to make sure that your income is not fluctuating when the market's fluctuating. That's a lot of times people just don't have that. Their advisor doesn't know how to create income with different asset classes. It's just traditional. Just take a percent out of the portfolio. That doesn't really work anymore. So you have to, like Kyle was saying, you have to have a plan in place. Now, what I'd like to say is, Kyle, if somebody out there that's listening right now that's in a lease and they have like 3 to 5 months, 6 months left in that lease, if they wanted to get out early, you would consider buying that car if you can, right?
Absolutely. We have an office down in Naples where we do that across the entire country. There is equity in 90% of the leased vehicles. So why would you turn that money? You're just handing it back to the financial institution or the bank who financed the lease. You're giving it back. So you could either buy it out or you could come into our dealership and we can pay off the lease and you leave with an equity check.
So what he's saying is, let's say you have a car that you're just going to hand back after your last payment, 36-month payment. You're going to hand it back to let's say it's going to be Chevy or BMW, Mercedes, whatever. You're going to hand back to them. But what he would do, because car values are up right now, this is the time to do it. Okay, this is a perfect storm for to your advantage. Okay, and so if you want to get out of your car early to go look for another car, or if you want to just get out of your car because you're not needing it, we just had someone, really a spouse, a client of ours, die. And so they don't need 2 cars anymore. So there's, everybody has certain instances that something's going to happen where they might not need 2 cars or they want to get out early. But yeah, give Kyle a call, because if you can make money on a lease, that's like making money on boats. And believe it or not, during COVID, we were able to make money on boats. We bought a boat and sold it for what we bought it for and enjoyed it for 3 years. And
it's the same thing with vehicles. A lot of consumers purchase vehicles and they're selling, to your point, they're going to a 1-vehicle family now, or 1 vehicle per household. They don't need the second vehicle. They're able to work from home or they're retired and they're taking advantage of the high prices in the market. They're cashing out their equity, so it's a smart play.
So, what do you think about these, electric vehicles, the EV? They're pushing them so hard, but I'm seeing that the numbers are going down. Sales are not rapidly increasing like they were. Is it because of charging stations? Is it because of all the fires that happened with them? Is it because of hurricanes that that it was not a good thing to have?
I think it's a perfect storm of everything you just mentioned. Pre-storm, we saw a thriving market in the EV market, whether it was a hybrid, plug-in electric vehicles, full electric vehicles, or And after the storm, they really pulled back. We cut our losses on some of the inventory we had. We had about 20 hybrid or electric vehicles in stock, and just the demand for those vehicles just really came down.
So where do you see the EV market? We're cutting down in the time right now. Where do you see the EV market in the next 10 years?
I really think it depends on what the federal government does for incentives for the big companies. But I think it's going to continue to grow. But I also think that there's a huge demographic that does not want electric vehicles. They want to go with traditional combustion engines.
You think you think combustion engines are going to be here in 20 years from now, 30 years from now, or is it going to just stop?
I think that they'll be here. Yeah, I don't.
Oh, that's big.
Yeah, when we had the hurricane and the trucks coming down to help everyone, they were powered by diesel, and they're not running on batteries and windmills. So,
and look at all the gas stations. I mean, it's and all the cars out there. I just think the government, if the government can just stay out of the business and just, instead of, the thing about it, these EVs, they should have just did hybrids, and they would have had a combination of
Definitely.
electric.
That's the best.
Yeah, electric, and you can get 40, 50 miles a gallon with that. But you do not need to tell us what we have to drive, and to have these great car companies like Ferraris, Bentleys, building these beautiful, beautiful engines by 2035.
Yeah, and the hybrid, like you said, it serves two purposes. But traditional plug-in electric vehicles, I think we're a long way from that, just from an infrastructure standpoint.
Well, you are listening to Kyle Lee with Lee Auto. Don't forget the dash.
Yeah.
Give him it one more time before we end.
Lee Dash Cars, don't forget the dash.
Lee Dash Car, don't forget the dash. I like that. And we always want to bring business owners here in our studio, and this is something that is very important because he employs 72 people, and that's a lot of people. He employs over 70 people that are dependent on him and his company to for their family and their living. So anytime we can bring someone successful in, we're going to be doing that. We're going to be doing that quite often. And when it comes to success, a success to me is a progressive realization of a worthwhile dream. And that was said by someone that I forgot who told me that, but it's a very famous quote. And John, you probably know who it is. But anyway, it is. And when it comes to retirement, it's the same thing. You don't want to be thinking about your retirement. You want to have the not the scarcity mode, but the abundance mode. And you want to have a retirement that you feel confident in. If you don't feel confident about your retirement, we would love to hear from you, and let us put a plan together for you. We've been doing this for over 40 years now, and we know how to do it to get you to and through retirement. Again, our phone number is 239-747-1077. That's 239-747-1077. And if you want to go to our website, it's savingtheinvestor.com. There's a plethora of information there, a lot of our TV shows. Speaking of TV, you can watch us on our TV show, and it's happened to be the same name, Saving the Investor, on NBC2 right after Meet the Press. It's a very popular show at 11 o'clock, 11 to 11:30. And then, of course, Jake the Millennial is our producer on this show, and he does a great I think he does a great job. 92.5. We've been on the radio for over 10 years now. It's time just flies when you're having fun.
Thank you so much for having me.
Absolutely, and thank you, Kyle, and enjoy your success. And you're going to have much more. Until next week, be blessed.